Joining me now is Paul Theron from Vestact, and I've got a big smile on my face because we were down 900 points, a loss of 3%. So I'm wondering, is this an opportunity? Are you worried? I mean, I was chatting to Andrew Kinsey a little earlier. He was saying that he is very concerned, complacency coming through, Dow Jones breaching that key technical level today. We're down below 12,000 points.
Water off a duck's back. You know, the market moves like this. On the upside, everybody's loving it. When it goes down, then it's the, harbinger of some major disaster. I don't think so. I've seen days in my time, which is about 15 years, where the market's been down 3–4% on a day, where some of the leading stocks like Billiton have been down 6–7%. So this is nothing.
All right, this is nothing. I'm glad you're saying that. And you're the eternal optimist. I'm not going to even fight you on that. Pimco's total return fund dumped all US government bond-related debt holdings. A sign that, big sign, get rid of US government debt, would you say? So the
background here is interesting. I mean, US 10-year treasuries are the most secure investment instrument on the planet.
They say, Paul.
Over the decades, the most stable government in the world, well-run economy, blah, blah, blah. That's what you buy in times of crisis. So we saw in 08–09 a big move into treasuries, so the yields came down. And the backdrop is that inflation used to be a massive problem, and over the decades it's trended lower as the Fed has got this inflation expectations under control, blah, blah. So Bill Gross is that very colorful West Coast asset manager who's the kind of bond king with a very high-pitched voice. And he comes on and he talks about what he's doing. What he is saying, amazingly, in his newsletters is that they're selling out in this particular fund of US Treasuries, and he's anxious about what happens when the Fed stops buying them with quantitative easing.
Exactly, because we don't actually know how much the Fed has been buying relative to the other countries that have been purchasing US Treasuries.
We know that their purchases have been substantial.
They have been substantial. So imagine that the Fed pulls quantitative easing, stops buying US bonds. Who's going to purchase them then, Paul? Will you be purchasing them with your rands?
It still remains very popular. Forget what individual investors are doing at the margin, but pension funds and major investment trusts and all of the other repositories of long-term investment savings have to buy government treasuries because that's where they get the income from. That's the long-term asset that they hold to match their long-term liabilities. So don't worry, there's plenty of people who are looking to buy these assets alongside, obviously, equities. So I don't really have a major concern, and to be perfectly honest, Bill Gross is notorious for talking his own book, so I wouldn't be surprised if he's buying them in some other fund.
I mean, they've a relatively good name. We watch them, we see what their sentiments are with regards to the overall economy. Should we trust what they're doing here? How do you think this is going to be taken by the market?
There are different scenarios going forward, but I don't think the emergency or disaster scenario where, yields spike sharply higher because nobody wants them anymore, inflation gets out of control, everybody is rushing to the exits. That's just,
Okay, so US Treasury, 10-year US Treasury yields, do you know where they're at?
Currently sitting at about 3.46, 3.5.
3.5%. Do you know that there's a lot of concern that if it breaches 5%, that we could be in a lot of trouble? Does that worry you that we're about 1.5% away from that, Paul?
No, that's an enormous move, and that would be probably brought on.
We've managed to do the 1.5% move to 3.5% move in not a very long space of time.
That kind of move would be brought on by some of the things that you're talking about. So I don't think it's going to happen because I don't see inflation going to those levels, and I don't see a investment strike happening which results in people not wanting to buy them. So I think it's going to be business as usual. We're going to get back into the long-term kind of range, which is around 3–4%. Inflation's going to be 1–2%.
I didn't expect you to say anything other than that because you're happy anyway. You're an optimist. I was talking to Clem Santa because he's a very well-known scenario planner in South Africa, and he was saying that he's watching those 10-year treasury yields because that could be a big signal.
But what are people going to buy instead? Chinese bonds, Greek bonds,
gold. Okay, I'm not sure about that, but apparently in South Africa, we could be raising the legal age of drinking.
Changing the subject completely. I'm strongly in support of this. I've got a 17-year-old. If he's not allowed to drink until he's 21, I think that's an excellent outcome.
Yes, because he can't go to a house party and drink there, Paul.
Damn, what a great idea. Who thought this up?
Paul, thank you so much for joining me. It's been a pleasure chatting to you. Paul Theron from Vestact, joining me for Mad Markets.